Hello Sanbaran guys, and welcome once again. So we are going to continue with our discussion on clubs. Remember that on the previous video we spoke about the receivables for membership fees account, which is an asset account. So in this video I'm going to try to also explain the other ledger accounts that you need to use, right? So let us say when you get a question, it's asking you to prepare the statement of income for the year ended 31 December 2024. So when you get a question like this, what you are going to do is that you are going to go to your answer book and write down the structure of the statement of income for the end of 31 December. So obviously you would start with the name of the club, right? You start with the name of the club, and then from there you write the heading, the statement of income for the year ended 31 December 2021. Most of the time what you write here comes from the required, right? You write as per the required to say it's the statement of income for the year ended 31 December 2024. So and then you divide your statement according to your incomes and expenditures, right? So here you list all your incomes. Part of those incomes, it's the membership fees. It's the membership fees income, right? So if you remember, yesterday when we did the receivables for membership fees account, we said that you have a balance here brought down, and then you have the membership fees income, and then you have VAT output, right? So this amount here that you recorded for membership fees income is the one that needs to be recorded here on the statement of what? On the statement of income, right? So in other words, when you are given this question, they are going to give you all the amounts except for the membership fees income account. That's the amount that is going to be the balancing figure on your receivables for membership fees account that we did on the previous video. Another thing that I want to quickly bring into your attention, it's the entrance fees, right? So different clubs have different rules. You'd find that in certain questions they say to you entrance fees are not capitalized, right? So when they say entrance fees are not capitalized, it simply means that those entrance fees are not treated as what? They are not treated as capital. So instead of recording them on the statement of changes in equity for the club, you will record them as part of the income for the club. But if it's the other way around, where they say the entrance fees are capitalized, that means that the amount is going to be recorded where? It's going to be recorded on the statement of changes in equity when the entrance fees are capitalized. So there is a difference, right? So these are some of the things that you need to look at, right? So this amount would be the balancing figure of what? The balancing figure of the receivables for membership fees account. This amount that you record here, it's the balancing figure of the receivables for membership fees account. That's the membership fees income. And then entrance fees, if they are not capitalized, you record them as income under the statement of income. If they are capitalized, you won't record them here. You are going to only record them on the statement of changes in equity. Another amount or another item that I want to bring into attention, it's the income, or let me just say not income but interest income, right? So for you to be able to record interest income, the interest income for the year, right, you need to be aware of two things, right? Firstly, you need to be aware of whether or not you have income that is still receivable, right? or income, or income that is received in advance, right? If you have income that is received in advance from previous period, or you have income that is still receivable, right? There's an opening balance and a closing balance. You need to know how to record that information, right? So for you to record interest income here, you need to check first on your statement of financial position, or on the balances that are given there, right? Because they will give you balances. If, for an example, they tell you that you have interest receivable, right, of maybe 10 rand, interest receivable of 10 rand 2023, and interest receivable of, let's say, of maybe 14 rand 2024, right? So you need to be able to use this information to be able to prepare the interest income account that you are going to use when you calculate the amount for interest income that's going to come here, right? So and then you'd also be given the amount from the statement of receipts and payments, right? The statement of receipts and payments represents everything that was paid cash for the year, right? So it's basically bank or CRG or CPJ, right? So if they tell you that on the statement of receipts and payment, the interest income that was received for the year, let's say 8 rand, right? How are you going to then record this information? Let's say 18 rand here. So we are simply going to open the account of interest income, right? We say, okay, interest income, this is income. So it increases equity on the credit side, decreases equity on the debit side. So you'd first have to think about these amounts here, right? The interest receivable last year and the interest receivable this year. So how do you record the this interest receivable? First of all, you need to analyze this. Okay, interest receivable, it means that it's accrued income, right? It's accrued income last year and accrued income for this year. Okay, what is accrued income? Accrued income is an asset, right? So that means that accrued income is an asset. That means that it's going to be recorded on the debit side. So then what you are going to do is that on the account of interest income, you are going to have a balance brought down and a balance brought down. You are going to have a balance brought down at the beginning of the year and a balance brought down at the end of the year on the debit side. Why? Because you have interest receivable, which is accrued income, and accrued income is an asset, and assets increase on the debit side, right? So the accrued income means that the interest income account is going to have an opening balance on the debit side, right? So here you record the 10 rand, and then at the end of the year as well, you are going to record the amount there, which is 14 rand, right? And then that would mean that the balance carried down also is 14 rand. Can you see? So now I need you to think about this account to say, okay, what would be recorded here on the credit side? What would be recorded here on the credit side? It's interest income from the statement of receipts and payments, right? If we received interest income during the year, it means that we debited bank and then we credited interest income, right? That's what you do to record this, right? So here they tell you that on the statement of receipts and payments, there was interest income of 18 rand. So this 18 rand, you'll take it and record it here, right? So in this case, then the balancing figure would be the amount that goes to the statement of income and expenditure, right? Or would be the amount that you eventually record on your statement of of income, right? So you'd add this side 18 plus you'd add this side and say 18 plus 14, it's going to give you 32, and then you transfer the 32 here, and then 32 minus 10 is going to give you 22. So that means that the interest income that you are supposed to recognize this year is how much? Is 22 rand. So the amount that's going to come here is going to be 22 rand. It's the one that you'll record here, right? And then remember, you need to reference your calculations. If this was, for an example, calculation 1, that means that here you'll say, okay, this comes from calculation 1 as well. So you use the same logic even for expenses as well. Let's say for expenses you have the following scenario, right? Let's say this is a club, it's a soccer club, right? So let's say on the additional information, they tell you that you have payables for soccer balls, right? And then these payables for soccer balls last year, 2023, you had 5 rand, right? And then 2024, you have 7 rand, right? And then they also tell you that you have prepaid, not even prepaid, you'd have soccer balls on hand, right? Soccer balls on hand when 2023, right? Let's say they say you have soccer balls on hand of 2 rand, and then 2024 they were 4 rand, right? And then they tell you as well that on the statement of what? On the statement of receipts and payments, right? What do you have? You have an amount that was paid for soccer balls, or 2 payables for soccer balls. Payables for soccer balls of how much? Let's say of say we paid our suppliers 11 rand for the year. So you need to record this information where? On the statement of what? On the statement of income. So that means that you need to calculate under expenses the soccer balls that were used for the year, right? The ones that are going to come here. So how are you going to do that? First of all, you need to recognize that soccer balls, they are an expense, right? So, but this expense, it's an expense that you are buying on credit. Soccer balls are an expense, but this expense is an expense that you are buying on credit. Why? Because you have payables for soccer balls. This will be given as part of the balances, or it's going to be in the statement of financial position. And then even the soccer balls on hand as well will be given either on the statement of financial position or on the list of balances or in the additional information. And then this will come from the statement of receipts and payments, right? So how do you then record this information? How do you calculate the soccer balls that we used for the year? You'll do the soccer balls account with the payables for soccer balls account. So in other words, to make things easier for you, you need to work on these 2 accounts simultaneously, right? Because they are linked to each other. I mean, you buy the soccer balls on credit, right? So how are you going to do that? It's very simple. So you are going to have your soccer balls here, which is an expense, right? And then you'll have payables for soccer balls, right? So this is a liability. So that means that it's going to have a balance brought down on the credit side, right? And then even the closing balance is going to be on the credit side. And then that means that the balance carried down balance carried down is going to be here as well. So you go to your list of balances that are given. For payables for soccer balls, at the beginning of the year was 5 rand, and then at the end was 7 rand. Then you record that, okay, 5 rand and then 7 rand, 7 rand, right? Okay, your marks, you have collected them. And then what else as well do you record? You come back to the soccer balls account and say, okay, on the soccer balls account, do I have accrued expense or do I have prepaid expense? And then in this case, you can see here, soccer balls that are on hand, it's prepaid expense. It's soccer balls that you did not use. You paid for them, but you did not use them during the year. So prepaid expense is a what? Prepaid expense is an asset. And then that means that on the soccer balls account, you are going to have an opening balance on the debit side. Why? Because prepaid expense is an asset. So you are going to come here and say, okay, my balance brought down is how much? Right. So my balance brought down for last year is 2 rand. Then for this year is 4 rand. So you'll record your 2 and record your 4. Then your balance carried down is going to be 4 as well, right? And then we are getting closer to the answer. And then what you are going to do then, you are going to say, okay, on the statement of receipts and payments, they tell us that we paid 11 rand for payables for soccer balls, right? So this 11 rand, remember, when you pay payables, it's going to reduce the payables account. So this 11 rand is going to come here. So here you're going to say, okay, I had bank, which is 11 rand, right? So when you add this side, you're going to get 11 plus 7 is how much? 18. Yeah, it's 18, and then 18 here. So the amount that you calculate here, it's the soccer balls that were bought, right? These are the soccer balls that were bought during the year, and this amount is including VAT. Why? Because we're in the payables account, right? Remember, when you record the purchase of new soccer balls, you debit soccer balls, which is an expense, right? SPL, and then you debit VAT input, right? And then the amount that goes to the credit side is payables, right, for soccer balls. That means that this amount is the amount that includes both the soccer balls amount and the VAT input, right? So this amount that is here is VAT included. So here we are on the payables for soccer balls account. The amount that you calculate here is the amount that includes VAT, right? So here you'll say, okay, you can say purchases, or you can say soccer balls, right? And then VAT input as well. So remember, the amount that you are going to calculate is the amount for both of them. So you'll say 8 minus 5, sorry, 18 minus 5 is going to give us how much? It's going to give us 13, right? Let's say here the balance was 2. Yeah, let's say the balance, just to change this and this only. Let's say the balance instead of being 5 was 2, right? Yeah. So you'll say 18 minus 2. Let's say 3. Sorry, guys. Let's use 3. So you'll say 18 minus 3, and then it's going to give you 15, right? So 18 minus 3 is going to give you 15. So the total amount here, including VAT, is going to be 15. So you need to record the soccer balls amount, and then you need to record the VAT amount here. So you can simply say, okay, you'll say 15 times 15 over 115. Why? Because this amount is the amount for soccer balls and VAT input. Can you see? So we'll say, okay, 15 times 15 over 115 is going to give us, let's say, 2, right? Because I'm getting 1.95. Let's use 2. So we are going to get 2, right? So this is your VAT. So your VAT, it means that will be 2, and then you say 15 minus 2, and then that means that the soccer balls amount is 13. 13 plus 2 is 15, right? So okay, so that means that you debit soccer balls with 15, with 13, and then you debit VAT input with 2, and then you credit payables with 15. This is the amount that is here, 15 rand, and then the 13 will go to soccer balls. So the purchases, if this business is a registered VAT vendor, so the purchases of soccer balls during the year, excluding VAT, is 13. So this 13 is going to come here to say, okay, I put new soccer balls here, and then you'll say payables, then it's 13. Then 13 plus 2 is 15, and then 15. 15 minus 4 is going to give you 11. So this 11, what does it represent? Soccer balls are an expense, and then expenses, remember, you close them off on the credit side. So it's going to represent the amount that goes to the income and expenditure account, right, which is the amount on the statement of income. So and then you'll come here and say, okay, on my statement of income, I'll have what? I'll have soccer balls used, which is how much? Which is 11. So you use the same logic then for all the other accounts as well. Interest income, use the same logic. How to record the opening balances and closing balances? You start with the opening and closing balances, and then you record any other amounts that are given. So it's either you'd be given a bank if you have statement of receipts and payments, or you'd be given income and expenditure amount if you are doing something different. Let's say they gave you the financial statements, all of them, SFP, statement of income, and statement of changes in equity. This amount would come from the statement of what? Of income. But mostly they want you to prepare the statement of income. So if they want you to prepare the statement of income, they will give you bank. Even here, they will give you bank. But these accounts, they work in hand. Payables for soccer balls and soccer balls. So they work hand in hand, these two accounts. So when you prepare them, you must prepare them at the same time so that you are able to find the other amounts. So this is what I wanted to explain. Maybe I can do one last example as well. So let's say you have stationery. You have an adjustment for stationery, right? So on stationery, they tell you that you have accrued income, you have stationery on hand, right? You have stationery on hand at the beginning, which is from last year, from 2023, right? You have stationery on hand of 5 rand, right? And then you also have what? You also have you also have stationery outstanding, right? You also have stationery outstanding at the end of 2024. Maybe the stationery that is outstanding is 10 rand, right? And then they tell you that on the statement of receipts and payments, right, the stationery that you paid was, let's say, 30 rand, right? So the stationery that you bought this year was 30 rand. Use this information to record the amount of stationery that was used. So you'll come here on your statement of expenditure. You are looking for stationery used, right? So how are you going to do that? It's very simple. So you open your account once again, and then you are going to have stationery, right? So with this one, you need to be careful, right? So stationery is an expense. So they tell you that you have an opening balance, which is stationery on hand. Stationery that was not used last year is what is prepaid expense, right? So that means that prepaid expense is an asset, and assets are recorded on the debit side. So that means that on the stationery account, the opening balance is going to be on the debit side, Are we on the same page? So here you are going to have balance brought down of how much? Of 5 rand, right? And then what about the balance at the end of the year? The balance at the end of the year, they say you have stationery that is outstanding of 10 rand. So when you have an expense that is outstanding, it means that you are still owing. So that is accrued expense. And then accrued expense is a liability. So that means that in this case, since accrued expense is a liability, the closing balance is going to be on the credit side. So the balance brought down is going to be on the credit side. So the balance brought down is going to be how much? The balance brought down is going to be the 10 rands. So it's going to be 10 rands here, and then balance carried down 10 rands here as well. Can you see? And then they tell you that during the year you paid, right? Where do they explain this? Statement of receipts and payments. You paid or you bought stationery that is 30 bucks. So remember, when you buy an expense or when you pay for an expense, you debit the expense. In this case is stationery, and then you credit bank. So on the stationery account, you are going to debit with bank. So we are going to have bank here. How much? 10 rands. So is it 10 rands? 30 rands, sorry. You see. So and then you'll add the side. So it's going to be 5 plus 10 plus 30, which is going to be 45, right? So it's going to be 45 and 45. So this is stationery, right? Stationery is closed off to the income and expenditure account on the credit side. Remember, expenses, they are closed off on the credit side. Incomes, they are closed off on the debit side. So that basically means that when you are recording income, the income and expenditure account is going to be on the debit side. But when you are recording expense, the income and expenditure account is going to be on the credit side, right? So here you have income and expenditure, right? And then it's going to be 45. So that means that the stationery for the year is 45 rand. So here you come and record, okay, stationery that was used is 45 rand. And then you reference the calculation then. So okay, this is calculation, let's say this calculation number 2. And then here you'll say, okay, this was from calculation number 2. And then this comes from calculation number 3. Right, so yeah, calculation number 3. So I don't want to make this video very long. Already we are approaching 30 minutes, right? So but this is how you need to think about these adjustments for a club, right? You need to apply your knowledge of reversal entries. I hope I've tried to clarify that. Sorry, reversal adjustments. I hope I've tried to clarify that. You also need to understand how to close off incomes to the income and expenditure account, and how to close off expenses to the income and expenditure account as well. And then from there, guys, it's just straightforward. You'll be fine, right? Another thing that I need you to take note of is that if they gave you, for an example, the question comes like this. So if they gave you the financial statements, right? So your SFP, SCE, and not SPLA, the statement of income, right? So if they gave you the financial statements, when you prepare the T accounts, you'll see that the balancing figure is going to be what? Is going to be bank, right? And then that means that in this case, the question that might follow is that please prepare the statement of what? The statement of receipts and payments. That's what they may ask after that. And then, but if they give you the statement of receipts and payments, that means that they want you to do the financial statements, right? So they want you to do the financial statements. What you then do is that you'll say, okay, the balancing figure in that case most of the time is going to be the income and expenditure, just like this example here. The balancing figure on your ledger accounts is going to be the income and expenditure, right? And then there you might be required to prepare the statement of what? statement of income, right? And then if you practice more questions, you try to apply the concepts that I've explained here, the logic that I've tried to explain here, you'll see, guys, this topic is very, 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 very easy and challenging at the same time. It's very nice. So this is what I wanted to explain in today's video. I hope you find this useful. Please, guys, share this with your friends, with your classmates. Let's try to make sure that everyone benefits from this, and at least they're able to prepare for the exam, right? So please subscribe as well. Let's push this account to 1,000 subscribers, guys. Thank you very much. I'll see you on the next video. You can also comment as well. Just before I close, you can also comment maybe the next topic that you want me to cover in terms of explaining the principles, and then so that I know what to prepare for on the next video. Anything other than that, guys, thank you very much. We'll keep in touch on the next video. Thank you.